All right, well, ready, set, travel. The domestic summer travel boom is set to begin as Memorial Day weekend marks the unofficial beginning of summer here in the U.S. And joining us now to talk about the state of the travel industry is Kevin Jacobs. He is the CFO and the President of Global Development over at Hilton. Kevin, really appreciate you take some time to talk with us this morning. So let's just start by kind of outlining for us, if you could, where your business is at as we head into, again, this Memorial Day weekend into three really key summer months for the travel industry, where you have most economies, most state economies open, vaccines continue to roll out. What state is the Hilton business in right now?
Yeah, first of all, thanks for having me. It's good to be on with you guys, as always. Hopefully I can get back to the studio and do this in person again soon. But I'd say our business is strongly in recovery mode, right? Our business sort of turned a corner in March as vaccination levels, particularly in the U.S., the vaccines started to get out there. People started to feel safer, moving around. And like I said, really in March, we got to about 55% occupancy in March, built to about, 60% occupancy system-wide in April, and things have continued to improve from there. So we're definitely in recovery and looking forward to a really strong summer travel season.
Kevin, a lot of the money is made on the business travel. That executive whipping out their corporate credit card, plunking down $100 for a dinner. Are you seeing a recovery in business travel?
Yeah, it's coming. I mean, I'd say, Brian, so far it has been led by leisure travel and probably will continue to be led by leisure travel in the summer. But interestingly, business travel has not been zero. Even in the first quarter, our levels of business travel from a volume perspective were about 50% of what they were in 2019 before the pandemic started. And so obviously that's 50% down, so it's not great. But I think, when we've said that to people and we talk about it, I think people are surprised to hear that business travel has been even that strong. And we expect, by the fourth quarter, by the end of the year, that business travel will be about 75% of what it was in 2019, and it'll continue to build from there. And, as we get particularly into the fall and schools go back and people start returning to the office, we really do think that business, it's been a leisure-led recovery so far, but business will be a fast follow.
Kevin, it's Julie here. I want to follow up on that a little bit. Someone weighed in on business travel this week, Brian Sozzi, the CEO of Airbnb, and he said he doesn't think it's ever going to be back to where it was. It's not going to sort of ever look like it did before because the bar is higher, because we know we can do meetings remotely and such. So when you talk about it getting back, I mean, do you think that there is a lower sort of potential or lower cap on business travel compared to what it used to be?
We don't. I mean, look, Brian's a smart guy. He's built a nice business, and so I guess we'll see who ends up being right. But we're not huge believers in new normal. Sorry, and I think that as the world sort of gets back, we've learned that we can do certain things effectively like this over. I guess we're on Skype now, but video conference technology is not new. It's been around for a while. I think the pandemic has taught us all to use it in a little bit different way. But our belief is that, if some business travel will be replaced by technology, and maybe businesses will use sort of lower value trip occasions, to go ahead and not travel and do something, via video conference. But we believe that, every one of those trips, if not more, will be replaced with higher value. Maybe you spend more time prospecting for new business and just generally economic recovery, right? I mean, if you look at the highest correlation for travel, and particularly business travel, for a really long time has been non-residential fixed investment or business CapEx. And, I think if last time I looked at projections for non-residential fixed investments, something like 7% this year, and people expect it'll be at a similar level next year. So generally economic activity generates business travel. And the other thing I'd say is, if you do believe that the world's going to be a little bit more remote and businesses will be a little bit more remote, that's all the more reason why people have to meet and get together. So if there is some level of permanent, decline in business travel, which again, we don't believe that to be the case. But if that is the case, that just means people have to meet more, because, there's no substitute for real human interaction, people getting together, collaborating, driving their businesses forward. So with all due respect to Brian, most of the vast majority of his demand is leisure driven. And so, a world with no business travel is good for Brian. So I'll just leave it at that.
Kevin, since we last spoke, I think it was 2019 in our studios, you've added a new component to your title, development. How many new hotels will Hilton open this year or next year?
Well, we think. Look, first of all, I now have the privilege of running our global development organization, which I'm very excited about. We opened up about 22,000 rooms in the first quarter. We think that's a pretty good run rate. We believe we will grow at a pace, net units 4 to 5% over the next several years, probably at the high end this year. So we've got a lot going on around the world, on the development front that's really exciting.
And, Kevin, I'd be remiss if I didn't ask about two topics that we've certainly got a lot of interest from our viewers on, which is price increases, if you're putting any in place, what's happening with pricing on the room side, and also what you're seeing on the labor side, the ability to hire the talent that you guys need in what's been a very competitive labor market, especially in the leisure industry.
Yeah, Myles, look, on pricing, the laws of supply and demand dictate what pricing is. We've got very sophisticated revenue management algorithms that, do a really good job of adjusting rates really in real time, so that as demand recovers, we can yield into rate. And we're already seeing, in markets that are open, where we're getting pretty close to sellout, we're having no problem generating rates that even exceed 2019 levels. So, there's really not, other than being really good at revenue management, there's nothing that we really need to do strategically to say, hey, look, prices have to be X. Prices will recover as demand recovers. And I'm sorry, I forgot the second part of your question. Oh, labor.
On the labor side, yeah.
Yeah, look, the labor markets are, challenging right now. I mean, it's tough to, there are a bunch of different factors going on out there. Obviously, you've got the federal unemployment insurance that, was a really great program that helped a lot of people out and, we really believe was the right thing to do at the time. But at the moment, we have this situation where demand's coming back. We have the ability to put people to work, and there's some sort of short-term, because of that, there's some sort of short-term dynamics that are making it a little bit tougher to find labor, and when you do find it, you have to pay. You have to pay a little bit more to get it. But we think that those issues will subside as the economy recovers, and we'll sort of get back to normal on that front as well.
All right, we'll leave it there. Kevin Jacobs, Hilton CFO and President of Global Development. Kevin, really appreciate you taking some time to talk with us this morning.